Hey guys, Mubarak here in Penny Stock. Hope you're doing well. In this video, I want to go over the top dividend stocks to look out for in February 2020. Alright, dividend stocks have always been all the rage because of the multifaceted benefits that you can get as a trader from them. Alright, not only do the dividends serve as like a passive income for you, but also it allows you to hold on to stocks with long-term benefiting from capital gains. And just for those in the United States, again, I am actually a CPA, but I'm not considering this as tax or investment advice. I just want this to be educational, and you should always consult, outside of this video with your tax attorney or whatever. But generally speaking, in the United States, for stocks that you hold for longer than 1 year, you're actually able to get a tax benefit from them. So, for example, if you were to be a trader and you were day trading and you bought and sold stocks, any profit that you made on the stocks would be taxed at the same general income level that you are at, right? So if you're making, say, 100,000 in the United States, I would say that's around the 25-30% tax bracket. I don't have it in front of me right now, but your trading and your profits from your day trading would also be in that same range. Now, the difference is that if you hold on to the stock for a year or longer, and there's no benefit for holding it longer than a year. It's that 12 months at stop is the threshold. Second you pass the 12-month hold, at that point, anytime you sell, you would be able to reap the benefits of the tax deduction. So instead of being taxed at your ordinary income rates, you would probably be taxed at 15%. So generally, if you make less than 60 to 70,000, you're actually taxed 0% on your long-term capital gains. If it's between 40,000 and like 500,000, generally, again, you can Google this. I'm just giving you rough estimations. It's about 15%, and then anything higher, if you're making more than $500,000, it ends up being 20%. So just wanted to talk about that because I want to show you guys the 3 dividend stocks that I've chosen out for you guys that I've been very interested in that are part of my portfolio as well. All right, so let's go into the first one, which is BGCP. Okay. It's actually a financial brokerage firm, and the way I found these stocks is by either using a stock screener, or what I would recommend is using something like finviz.com, and I'll make sure that the link is in the description below. But recently I've been becoming a fan of Finviz because it's a great stock research tool. There are certain filters you can set up so that way you can feel confident about the stocks that you're looking for. And all of the stocks I'm going to go into and my general advice to you pertains to certain threshold or filters that I believe you should set up. So when it comes to dividends, you're actually not looking for volatility. Okay, you don't want long or large variances and spikes and dips in prices, because your strategy, sometimes again you can day trade dividend stocks and people do it all the time, but if your main strategy is, okay, I'm looking for buy and hold strategy where I can benefit to get some passive income from these dividend stocks, then what you're going to have to do is you're going to have to invest and trade and hold on to these types of stocks without volatility. And so how do you find that? Well, generally speaking, the larger the company, the better chance it is of being a stable company. So I look for only large cap stocks, and on finviz.com, or really I look for a company with a market cap over $1 billion at least, right? Maybe 10 billion. Sounds like a lot, but there's a lot of stocks out there. And usually I look for a dividend yield just higher than 3-4%. Really just because anything lower than that is not that interesting. Making 3-4% on your money is kind of like a bare back minimum threshold I would recommend. There's savings accounts, high yield savings accounts from Goldman Sachs, Marcus, and Ally Invest, and these other hot startup tech banks that it comes out to about 2 to 3%. So you could do that risk free, or you could invest a little higher in dividend yield stocks. So the one I came across is actually BGCP, which actually provides a 9% dividend yield, and that's actually a fantastic yield for a big, large cap type of stock. And it only trades roughly around $6. I think $5.90 as the day of this recording. But $6, again, it's very important to realize that just because the price of the stock is $6 that doesn't necessarily make it a better or worse buy than a different stock, okay? Because stock price has to do with two different variables. Not only does it have to do with the demand, right? How many people are buying the stock and how many people are selling it or getting rid of it, but it also has to do with the supply, right? That's basic economics 101, but generally speaking, any company that goes public, they all have different variations of their own, how many shares they have outstanding, right? Because when you make a company, it's an arbitrary number. And the way that they get to the market cap that I was referring to in the beginning, which generally people look at as a method, right? Not the only factor, but a method of valuing public companies, is you multiply the price by the amount of shares outstanding. So for example, if these guys, again, usually it's in the millions or tens of millions, but for example, if for some reason these guys only had 100 shares in circulation, then, simple math, 6 times 100, they would have a market cap of $600. So I just wanted to include that in so you guys kind of can understand that conceptually. But the second one I came across is in the telecommunications industry, and it might be something that you guys actually remember from back in the day, which is NOK, Nokia. Okay, I know that's an old company. I know you guys remember that as those, 20 years ago, those little small flip phones that everyone used to have. But they are actually making a comeback and have a pretty good technical analysis chart, which we talk a little bit more about at inpennystock.com. But they also provide a 5.5% dividend yield. So just making sure, just thinking about it, I try to make these videos for beginners. So if you're just new to this and you're wondering, okay, what does that even mean, 5.5% dividend yield? So what that means basically is it's telling you how much of a payout you're going to make annually based upon the stock price. So let me explain what that means. Let's say this is trading at $4, right? Which it actually is at the time of this recording. It's roughly in the range of $4. Now, say I was looking for a 10% return, right? So on $4, a 10% return means that I would want to make 40 cents. Okay, and obviously these numbers get multiplied because this is just one share, right? So if you're spending $1,000 or $4,000, you would have 1,000 shares of this, which means that 10% of that would end up being about $400. Okay, so if you could passively make $400, it's not the worst case scenario, right? Off of a $4,000 investment, you're making $400. Obviously as that scales, that's a fantastic return. 10% is pretty solid. But let's go back to the understanding of what a dividend yield is it's basically telling you that on that share price, how much money are you going to make? So if this is $4, then, and I'm getting about 40 cents, if that's what the dividend is going to be in total annually, then I have a dividend yield of 10%, because you're just kind of doing the fractional thing, right? So you're making 40 cents over $4, and that's equal to 10%. Or it might be the other way. But, I basically just wanted to show you that that's kind of how the math works out, where you're trying to just understand the actual percentage of money that you'll end up making by buying into that stock. So that's why dividend yield is important. Nokia is a great one right now. Finally, this one almost accounts for 20% of my portfolio, and I invested and bought it at a great time, so I was able to make a ton of money from it. But I bought it as a value stock when after the financial crash 2010, 2008, and I bought it in 2010. This also has a fantastic dividend yield, which I've been benefiting from passively over the last decade now, which is AT&T, right? Another telecommunications company, but because it's a large cap, because it's a multi-billion-dollar company, probably a Fortune 50 company, and it does trade at a higher value, $37, but it still gives you that yield, which means if we do the math, you do $37 times 5.5, which is roughly 3.7, $1, probably 85, yeah. So from one share, you're getting this much annually. Now again, it doesn't look like a lot, but when you multiply it by hundreds and thousands of shares and you grow your portfolio, you're getting this paycheck coming to you passively month over month, you know? And just want to leave you guys with one little tidbit of advice. Being a CPA, working in public accounting, I used to work with a couple of high net worth individuals, or actually a multitude of high net worth individuals, like not personally, but I would be doing their tax returns. And they usually, right, the rich ones, the old money ones, the ones who, you know, are multi-millionaires, they used to just usually have a nice base of investment money, like a few million put aside, and they were just making their profits and spending their daily income or daily expenses off of the dividend interest that they were making, right? Because if you think about it, if you make 2 million, if in your lifetime or over your parents' lifetime or couple successful years, you have $2 million saved up, right? And you get that at 5% dividend yield, you're making, without even moving a muscle, you're making 5% or 100,000 a year passively just with dividend stocks. And those percentages and total amounts go up the more people are able to save up. Hope that makes sense. If you guys have any questions, as always, feel free to reach out to me at admin, that's ADMIN, at inpennystock.com. Hope to hear from you guys soon. Take care.